Good morning, traders, and welcome to the Bookmap Live Trading webinar. Today with Scott Pulcini. We do this every Thursday, 10 a.m. It's live trading. It is in demo paper trading mode, as we'll get into the details here. But learn how to peek or trade from other traders, their methods, their setups. This is not a trade following room. It's about education and understanding how they're trading with their setups and their strategies, how they manage it, their psychology, etc. You guys know who Scott is. If you don't, please read up on him. He's got a great story, how he got involved in trading and the size and volume he was trading. He does offer mentoring services here. I'll put these links into the chat if you want to reach out to Scott for his personal education. Let's go through the disclosures here. I needed to go through this before we move on. This is important. General disclosure. All Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Live trading is in simulation, demo paper trading mode, and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. The risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security nor lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. All right, with that said, let me broadcast Scott's screen in here. So Scott, when you get a chance. There it is. I got it.
Nice. Can you see, is it Crude?
Yes.
Okay.
All right, we're all set. Excellent. Thanks, Scott. Take it away.
Alrighty. So you can see here I got long earlier Crude. I've made a couple mistakes already today. I should have added to this trade. I'll show you that. And then I missed this complete opening drive in ES. There was buy ice down here. I should have been aggressive. I saw it when it was, let's see, this zone was right around 95. So I saw it up here, and I was just praying it would pull back at least to the ATR. At the time, the ATR, 5-minute ATR was like 5.5, where I should have been in aggressively, and it didn't pull back, and then I just sat here and watched it rip. So not a good start for me. I mean, it's okay. Just mentally, I hate missing 30-point moves when it's slapping me in the face. But we'll go over, why this is bullish and why I'm reluctant to sell. We've been talking about this in my trade room more and more often, where when you get the ADD advanced decline above or below 2,000, that's a trending type day. So you want to be very careful fading moves, right? So the best trades with this ADD this elevated is to wait for pullbacks and get long, but there's just been zero pullback. Speaking of which, I was so mad I missed that opening move that I turned my tick strike off, because it's literally like torture treatment, hearing the buying nonstop for a half hour and not being involved. So I'll bring this back up, but it was not a fun opening. And I missed, again, I had a chance in this Crude trade to add to it, and I'll show you that. But I will go short here in Crude. This is an important area. I think it can pause. So right now our ATR is 31.3 in here. You can see it in here. And you can see this is an important zone. We'll go over this here in a second. So 31.3. So I've been going now, you guys remember, for forever I've been using to enter in aggressively, like 80% of an ATR. First it was 70, then it was 80, then it was 90% of an ATR, and I kept getting ticked all the time. So I've just gone outside an ATR. I'm done trying to squeeze out a few ticks. So the bottom line is, about 32 ticks out of here is above an ATR. That's where I'll enter this short, and we'll go over why here. So that would be 26 below. there. So you can see here, we've been talking about this for the last few days in my room, building balance. What happened the other day is we had an attempted breakout and it failed, and usually most times when you get a failed breakout, the market does that. So a lot, so if you would have been short here, that would have been the right play once we got through this high volume node of this balance area on a failed breakout, right? And then you can see it just would not break. You got buying tail, buying tail, buying tail, buying tail, directional conviction. Something was telling you that this was going to happen, and you just basically had to wait for this to get out of this zone, and that's exactly what happened this morning. We opened up right through this area. This is the area of, we gapped down whatever day this was, and directional conviction that led to this huge, $8-9 move. So this was an important zone, and you can see how it was struggling here, and then finally ripped through it. So this was the go time, and there was a buy stop run here, and then there was buy stop runs all the way up through here. But now we're in an area where this could pause. I'm not afraid of standing in the way of guys puking. So this is what this move was. Everyone who was short in here, longer term traders, that's what this move is. It's a puke, right? They have to get out of their positions. But we're far enough away from that now that I'm willing to give a short a try here, at least to a pullback to this zone, because of this area here. You can see selling tail, selling tail, and then huge directional conviction. So this is actually the start of this whole move. So this is a good area, risk reward, to give a short a shot. Obviously this market's very strong today, but this is an area where it can pause, and I'm willing to short that right there. So this is the opening where I got long. So this is what I'm talking about. Like, I missed this trade, and it has been nothing but buying. Let's just look at this real quick. I just want to complain a little more here. Seriously, this is 40 straight points that I missed. So I got to grin and bear it, but we'll go back to crude here in a second. We'll just go over what's going on here. So you can see here, I was out yesterday afternoon, but this was obviously the Fed rip. And we kind of knew that was happening because in my room we were on the PM webinar a couple days ago, and we saw about 12,000 icebergs in this zone. So I actually highlighted this zone, and you can see we were actually joking, even though it's not a joke. I think it was probably exactly right. We were saying, oh, they must know what the Fed minutes are going to be. Literally just crazy ice, like just I've never seen anything like it. It was just like buy ice, buy ice, buy ice, buy ice. There's a couple stop runs, buy ice, and so I said you guys would be wise to mark this zone and watch it and see how we react to it. Just trade like, this is just like a regular. Obviously this is large, but I said whatever way we break out of here is going to be the big move. And lo and behold, Fed comes out. Oh, it was bullish. It's almost like they knew something, and here we are. Right, so we're ripping. We're coming into an important zone here where this could finally pause. Again, I'm not very excited about shorting this at all because of the trend up day potential. Not potential, we're already trending up, but we'll see up in here. If we get something major, I may shorter for a pullback, but I'm looking more for pullbacks to buy. And right now it just feels like we're going straight to new highs because I'm not short. So, over the next day or two, if this does pull back to this area, you want to watch this area very closely. If it gets through here, this is in trouble again. If not, then we're coming up to these areas here that I drawn these zones. So this zone was where this directional conviction started. There was a buying tail. So usually this was, I've been trying to draw these zones so you guys can see exactly what I'm incorporating. So obviously this was from a long time ago. I don't even know what this was from now. But the current market was still respecting the zone. That's why I kept it in, right? So you can see here, you had directional conviction, selling tail, directional conviction, selling tail, right? And we kind of struggled here, and we tried to get above it. That failed, and then we gapped down right through it. And this is what started this directional conviction. So this is a zone where this could pause. So if I see something strong enough, I will take a short here and I'll be ready to peel out of that puppy on a pullback because this is obviously, like I said, a trend day up. This is just very, very painful though. I dropped the ball here. Should have been in immediately. So the reason I should have been aggressive here, one, the charts, right? We were breaking out of this. This was a balance yesterday afternoon. Pull back into it. And and then this was basically the breakout of this area right at the open. So that was bullish right there. And then I take any trades above the Ludwig levels.
Gold stopped by GC, 317 contracts.
I will trade aggressively. We'll go to gold here in a second. So that was, we were above the yellow lug, so I would have been in aggressively, and now it's just hugging this standard deviation.
Soybean July iceberg sells ES, 156 contracts.
A lot going on today. So anyway, you saw that zone that I just drew, and now we're approaching the top of this market profile composite from a while ago. So this is an area where you got confluence, right? So you have red lug, you have the top of this profile, market profile composite. Composites are just multiple days value areas added together. So you had one here, you had one here. We launched out of that one, but this is an area where you got this, you got this, you got extreme standard deviation of VWAP, right? So this is daily value area. That's one standard deviation, 1.5, 2. All this stuff's confluent where this could finally take a pause. And then what you also want to keep an eye on is relative volume. Is there enough volume coming through this market out of the ordinary to push it through, to do something out of the ordinary, right? To push it through those confluent areas. And you can see this volume is pathetic, right? So it's not, it's barely getting to 100% of the 100. So 100 is 100% for the last 30 days for this exact time period. And you can see we're bare. If it's red, it's not good, right? As far as big money playing. We did have this R pre-market, right? And that kind of signaled, okay, something's going on, and then you get this launch, right? So a lot of times when you see a ranging market and nothing's going on like this, and then you see relative volume and the market's basically still in that area, you're like, okay, something big's about to happen here, and that's exactly what happened. So that was another reason why I wanted to get long, and I dropped the ball. And anyway, we're approaching an area where there's not a lot of volume to keep pushing it, and you're going to get these algos that snap it back at extremes. So if we get a signal, I will short it. But the better trades today, I think, would be waiting for pullbacks and then going long. So we'll see what happens here. See what's going on in soybeans. I don't want to miss. There's a bunch of stuff earlier. I put on a trade and then I made a mistake, and then I just got right out of it because I didn't see this most recent sell ice zone. Hold on here. Something new came in, I think. Yeah, 144. So you had a stop run at the open, and then there was sell ice. I don't think this zone is right. Yeah, that's right. So I was playing off the stop run because we were above the yellow lug. I'll show you this. I was going to go long, and I got long ATR above this stop run zone that I just showed you, and then I'm like, wait a second, there was sell ice right after that. So this is a brand new setup. So you always want to default to the newest setups. So that was that. So I should be getting in an ATR above this zone, this black zone. So I may have missed that as well. Let's see. Of course I did. And you even got your patented ATR pullback on. So I should have been long right around here. Maybe I'll still do this. Let's see. ATR in here is 3.4. So 3.5 points out of here would be 6. That's actually right here. Let me just make sure we are on the lugs, and I will potentially go along that. Okay, so this is an instance where I'm not going to go long right now, right? We're really close to this red lug. It's also confluent with this market profile composite low. So if we bust through here, make new lugs, I get a long signal, then I'll go long. In actuality, what I will do if we get up here and the new signal comes in, I will go short aggressively because of the red lug and because that's confluent with that, right? And we're extreme standard deviation, the stuff we're just talking about.
RTY iceberg sell RT. 150 contracts.
Stuff we were just talking about in ES. So I'm not going short this actual, let's see where we're at here. I'm not going short this setup here because we've already.
RTY iceberg sell RT.
Oh, it's really throwing me off. We've got an ATR above there, so that disqualifies this as a short setup. But if I get a new short setup up here, right at the red lug, I will take this short aggressively. And quickly, how you could have known, this is what we talk about all the time in my room, right? So the more you understand structure, the more you understand what should happen when certain events happen, right? So yesterday we gapped down through this important zone, which was extreme directional conviction, buying tail, right? So this market, once it got below here, should have died, right? And I actually was short this setup. There was a setup and I lost a little bit on it, but and that's fine, right? You're going to take losses in the market, but the loss told me something's up. This thing's going to rip because for this to gap down through this important zone told me this thing should do that. It did hold this balance area here. It did hold the high volume node, but got a little bit below. I'm like, this thing's going to die, and there's nothing here. I think this thing can pull back to here. It did nothing. It just sat there all day and then did this at the close. And I'm like, okay, something's up. And then lo and behold, today rips, right? So many times in trading, what should happen that didn't, the trade the other way is the big move. And that's exactly what happened today. You see this, we've ripped almost 30 cents now. Now this is an area, again, we just saw a red lug. We saw the market profile composite low from whatever day that was. And you can see that we're in this zone. This is where this directional conviction started. So this is why I have this zone, and it started over here. We gapped down, came back, failed, huge move down, gap down, not gap down, sorry, directional conviction down, and we're here again. So now, if I get a signal here, I will short this, and I'll short it. This would be an A plus setup, right? If it can get above here, then support or resistance becomes support. And then hopefully we'll draw new lugs, and I'll look for longs. But right now, if we get a signal, I will be getting in this trade aggressively for a short, because also this is another great trading edge. What you want to look for is straight beeline moves into important areas, because all the energy is used to get to the area, and then you got the people that see the same stuff, right, that fade those areas. So there's all the buying is done to get to this area, and then many times that's where it fails. So this is a very good short opportunity if this can hold right here and we get a signal. Put my thing back up, sorry. All right, so I'm just waiting for something. There's been little stuff, but nothing. I mean, 144, that's not threshold for me. So if we get something big here, I will short this. Let's see, do we ever get filled in crude?
Are the beans like one of your best, you get your best results from?
Yeah. Let's take a little peek here.
I think it was it NASDAQ that you traded really well, or Crude, or I can't recall.
Bruce, I trade everything very well. I'm just kidding. No, there's some. I've been getting smoked in crude and gold. That's what I've talked about in these webinars since the war. I've just been getting crushed. So let's see here. So natural gas numbers coming out in 5 minutes too.
Yeah, you've been killing it in natural gas too, right?
Yeah, that's been a great trade. Yeah, so you can see my products right here. So look at this. These were all. Both of these were close to even. I was up a little bit in both of these, and since the war, I've just gotten killed, and because these are the ones that react the most to the wartime news, right? And every day there's some kind of crude, and then gold's just been a complete utter chop fest. So let's see here. So ES, not bad. That actually surprised me. That's probably the market I hate the most as far as watching it. Natural gas, huge, and soybeans. This is what I tell you guys. This is exactly what I say. You need to have other markets that you watch, so when these markets suck, right, you can watch these, because all these products, it's all the same stuff. It's volume, right? My main driver, anyone's main driver should be the real-time volume, right? So when these markets aren't trading, you can move to these, and then you can look at this stuff and be like, you know what, I don't want to trade this. So it's not as easy for me, because I'm in my trade room and do the webinar, and I want to point out stuff, and it'll turn around, right? I mean, once the stuff normalizes, these will get back up here. But so that's the one thing you want to know, what your best products are, and then you also want to. We talk about this all the time. This pains me to look at, but we'll look at it quickly. You can see Mondays are my absolute worst day. I've gotten smoked on Mondays, so you can come in on Mondays and just, I don't know what the reason is. Maybe it's me, maybe it's the market, right? Maybe I'm just hungover from the weekend playing golf or whatever it is, or markets are just low volume and blah, blah, blah. It doesn't matter that you want to know these things, right? So again, guys, you should be using something like this. Is the best one I've seen, TraderSync. Go to my website, click on the banner. All the banners on there, you get discounts to all this stuff. So TraderSync get a discount. Wednesdays are okay, and then you can see my best days are today and Fridays. So you can literally structure your trading plan. This is the benefit of being a trader, right? You can say, you know what, Mondays and Tuesdays, I'm not even going to trade. I'm going to go, do something else on those days, and I'm just going to trade the end of the week. This is the beauty of being a trader, right? Like, you can trade anywhere in the world. You have an internet connection, or you can decide what days and times you want to trade. And then the other thing, we talk about this every week too, you can see, and this goes back to when I was a scalper, in even the S&P, I used to leave. I mean, look at this P&L at this time of day. So this is my time. So this is, for some reason, this is only an hour off, but this is 10 o'clock Central. Every day, I used to get up and leave from 10 till about 1 o'clock Central, because I would just get killed, because that's when the big money leaves, in New York and so on and so forth. They go to lunch, and then the algos, and then, back then there was a couple market manipulators that would just flip the market back and forth, because just like algos right now, right? They flip the market back and forth until somebody stops them, meaning when the big money comes in and disrupts their game. So this was the same stuff back then. But if you take this out, I'm up, over 100 grand trading, and I'm not trading big. Like, we talk about this every day. Then that should be very motivational for you, that you can make this kind of money trading ones and twos, right? So my whole goal is, as I build up my P&L again, then I go to when I was started as a scalper, I was trading ones and twos, and then I was twos and fours and eights, and that's what will happen here too, right? But I am basically on the way back. So I've got to, you've got to build up your account. You can't overtrade your account. We talk about that every day. I'm not going to start going on these rants, but that's just something to look at there. You have to be using that. And the other thing too with this is, I've been slacking the last 2 days because I've been out, but I got to put these in. But you go in here, and we're going to look at this, and probably I'll give it a couple more weeks of trades. I don't know why this is so slow today, but you can go in here and see all my trades. And I go in here and I post. Let's find a good one so I can get a good vibe. So here's an ES trade. Right, go in here, and I've been posting these in my room as well, right? So in my room, see here, hop over to my room. That's the great thing about Discord. You go in these individual channels and you can see my trades. I mean, this is, I keep telling my room, like, this is, you're not going to get a better resource for this. You can go in here, and so just because I post all this stuff doesn't mean every single thing has to line. If everything lines up, that's even better. It's an A+ trade, but you can go in here. So I basically, let's see what trade this was here. This was a losing trade, but I post everything that I saw in the market, what it looked like, what the Bookmap looked like. Right? Okay, so that I do it before and after too. So this is broken ice. So you can see what I saw. Here's the zone.
Iceberg sell NG 150 contracts.
Right, we're looking at that. The number just came out, and then I post the lugs and the market profile and relative volume and the edge and what everything looked like at that time, right? And the hero, spot gamma hero on their site. You can also have that on Bookmap, and then with the 5-minute, the 60-minute algo guy, talk about that, what the internals look like, right? So this is an incredible resource where you should be doing this for all your trades as well, but you can go back and look at all my trades and be like, I like that, and that. That's what I'm going to look for and build your own trade plan. That's the whole idea. It's not to mirror my trading. It's to look at what I look at and say, yeah, I like that, I don't like that, that makes sense, that doesn't make sense, and come up with your own trade plan. So this is an incredible resource that my trading room has, right? There's another loser, but I post both, right? I'm just post my winners. I mean, you guys see everything, right? I can't be more transparent than I am trading live and posting this stuff. So that's another awesome thing in here. You can go in here and post everything you saw in your, and then you put in what setups they were. So we're gonna, after about a month, one more month, we're gonna go in here and look at, hey, what did Dumb and Dumbers do? What did Titanics do? Like this one was Titanic that held to the downside, stuff like that, right? So it'll be very interesting as we move forward. All right. Any questions on that, Bruce? I don't think. Sorry,
No, we're okay. We're
Turn it
doing
on.
okay in Discord and YouTube here. Let's see.
All right, so I still have not filled on this. If this goes an ATR above this most recent setup, this stop run, then this is disqualified as a short setup, and I'll look for something new. Yeah, I could go long as we draw new lugs. We just have not. Again, lugs are Ludwig levels. If you guys are interested in those, they're great for day trading. They're very, very powerful when you use the real-time volume with them. They're, support and resistance targets, etc. So, I don't go long. So, for instance, here's that stop run, right? It's like right there. I won't go long into the red lug. I wait for new lugs to be built, kind of like here, right? So this was right at the open today, and this is where I got out of that long. The setup happened here, and we ripped up to there, and I just got out, and we built new lugs. And we did have some setups that I could have got in aggressively. I just was not. I was back and forth in between products, and I didn't even see it until after it was already running away, because this was a straight line move. But point is, I'm waiting for something like this to happen, get new lugs, and then I'll go long, right? But until then, I'm going to wait, and I will possibly short this because of everything we just talked about this area. What's going on?
Just let me explain something quickly in YouTube. I think this would be
Soybean ice to iceberg sells here.
the quickest. The way Scott is trading, well, first off, he's futures trader, so we can't look at some of these other stocks and cryptocurrencies. But the way he's trading is he's looking at the real-time volume within Bookmap. He's waiting for an alert. And the alert will just key him into something that's going on, something special that's going on within the markets. A stop run or an iceberg, like a major transaction there. Scott heavily uses that, and then he is alerted by that. Then he goes and looks at the instrument, and then he looks at the bigger picture, the order flow, what is it doing, and then he'll decide how he wants to trade it at that point.
Right. So, I mean, you should always know the bigger picture before you start trading in the morning. So you go over your markets that you watch and just have an idea of where you're at, right? So I knew just from the last few days, Crude, for example, I knew we were right in here right before the open. So, and I knew if this got above this was going to be a major puke. That's exactly what happened, right? And then you wait for your real-time volume setups to go long, or to trade your trade plan, right? Your thesis for the day. So where I messed up on this trade too, where this should have been a much, much, much bigger, you can see here. So this is where I got out at the red lug at the time, right? But here is where I had the opportunity. So I originally got long off this stop run. You can see this was 2 something. You can see it on here too, 210, right? So this is the great thing about the iceberg, or the stops and icebergs on chart. It helps you draw your zones, right? And I knew we were above the yellow lug. So as soon as we got an ATR out of here,
Soybean ice to iceberg buys ES 150 contracts.
so when we got it at the time, the ATR was like 20 something, 21 or something. So I had my order resting. Right when I bought it, a new setup occurred. And that is awesome as far as risk, because if I just would have been filled on this, I would have had to put my stop and ATR below this zone.
Soybean ice to iceberg.
Goodness gracious. Oh, it isn't. Soybean in a second. All right, so then this fired off right when I got filled. So what was great about that is I could then trail my stop and ATR below. You can see it was actually right in the middle of this zone. I just moved it outside here, and I was basically saying for this market to come back and stop me out, they had to get through this prior stop zone too, right? But the point is, my stop was down here. I was able to move it up off this new setup. or I made the mistake because I only had a couple on, right? I only had a 2 lot on. Like I was telling you guys, I'm not, obviously trading huge right now, and that's fine. But when it did this and it came back into the zone, the patented retest fail, I should have added right in the zone, right where I originally got in, because now my stop is just below this, right? So I could have put on more size, is what I'm saying, and I should have, because I had the opportunity because of the new setup. If there's no new setup, then no, I don't put on more size. But this afforded me to put on more size, and I didn't do it. I glanced at it and I just didn't do it, and then just rips, right? And then I got out the red lug, and then you can see here there were opportunities to get right back in this thing. So you had stop run. This never got an ATR below here. Stop run, stop run. These are all stop and holds, right? It's one of my 6 setups that I trade off of. And then here we are now. So you could have added to this trade as well. So again, I had a lot going on and trying to, get ready for the webinar as far as looking at all these markets. So I kind of dropped the ball today. Today should be an absolute huge day. So we still got a lot of time left, but not a good start, especially in this market. Yes, I'm still stewing over this. I just love the days that I missed the trade. So if I'm long, I have to go through this for 3 hours, right? And then the days that I want it to pull back and do this so I can get in, it just keeps going up. So that's just trading, guys. It's, I complain, but I've seen this 1,000 times, so I know what to expect. But if this pulls back here and I get a short set or a long setup, I'll go long. There's just nothing here, right? And we saw that relative volume. It's look at this relative volume right now. Look how bad this is. Look at this. This is horrendous. So like I said, if we get something up here, a signal, I'm going to go short just because I know these algos are going to revert this thing eventually. Let's take a look here. We'll see what's going on in soybeans. I would love one more pop up, one more spike up, get a signal, and then short this, because again, with that kind of volume, these algos are going to snap this puppy back eventually, and we're right here too. This is a great area to short. And then I'll look for areas to go long once we pull back. If we pull back, we should pull back, but we'll see. All right, let's see what the heck is going on in this market. My buddy's soybeans, you can see it. So this is monster. This is huge ice, right? This is my threshold's 150 for this market, and we're at 500. You don't see 500 in here very often, so you definitely want to take note of this area. And we also know, we just went over the bigger picture, why this area, and I actually think we're above this zone now, so this could be go time on the long side as well. So let's draw this zone. I really want to trade this area because of the size, right? So you got to remember, guys, don't get confused. And even the guys in my trading room are always like, well, what are they doing here? Are they doing this? Are they shorting? Are they covering longs? Are they hedging options positions? It does not matter. You're never going to know what they're doing, ever, unless you work for the firm and you're the trader, right? The area is important. There's 2 sides to this trade. There's someone selling it hard, and they're running into a mouthful of buy icebergs. All you have to know is the area. The area is important in how the market reacts to it. That's what you need to know. Make it as simple as possible. If you try to dissect every move in the market, you're not going to make it. It's just because you're never going to know what every move means, nor do you need to. Make it simple, know your areas, wait for the volume setups in those areas, and trade those areas. And then control your risk and know where your targets are, and that's trading, right? That's how you make money trading. We talk about it every week. The more stuff you have on the charts, the more likely that you're not profitable, or you're not going to be profitable. All right, so let's take one quick look here. It's over here. I just want to see if we're through the zone. I think we are. Yeah. So you can see this just keeps going, right? This was a good place to potentially short. So this is exactly what I'm talking about, guys. As far as if you are a bar chart trader, which is what 95% of people, 5% are using Bookmap would be my guess, maybe 10. Right? If you're just looking at this, you automatically short this area. Everything we just talked about. Remember, I was just saying I'll go short if I get a setup. How many guys have the same exact zone drawn? Huge directional conviction, huge directional conviction, directional conviction. Hey, we're back here. Straight beeline move. I love this. And that is, as far as technical stuff, this is a great area to short. but there was nothing here volume-wise for me to short it. So I did not take a blind short in here. Do you see how you use the real-time volume to confirm your areas? Now, whoever was short in there, maybe they're still short and they're like, oh, this isn't going much farther. They have no idea that some big money came in here with 500 icebergs. That is really, that's the information, right? The charts are, navigational, but this is the information you trade off of. So now, if this holds, I will gladly go long this, right? As long as we built new lows. Let's take a peek. Again, for the Ludwig levels. I always get that question too. It's ludwiglevels.com. Go in there. Her site's from 1972. I always make fun of her about it. She says it does what it needs to do, which is true. Say you saw it on the Bookmap webinar and you get like more products than normal and discounts and so on and stuff, so on and so forth. So you can get in there, and you can see here we've drawn new lows. So now, remember I just said I was hesitant to go long with that setup down here into the red lug. Well, now here's new lows. So now the next target is that. So and we know there's huge ice here, right? If this holds and goes, I'm going long because we're also above the yellow lug now, and I know we're through that zone. I'm going long aggressively. What is aggressively? Well, it used to be 90% of an ATR. Now I'm going to go outside an ATR, but meaning, so right now the ATR in here is, what is it? 4.26. You can see it right there. I can't move my cursor there, but it's 4.26. So we'll say 4.5 points, which is actually a very high ATR for this market. So that'll put me at 22 to go along this market. And I'm okay doing that because the red lug isn't all the way up till it's 31. So this is almost like a 1-to-1 trade. Obviously, when you're trading, you want to get 2-to-1 or more when you're taking your trades. But there's enough going for this trade. I'm willing to go 1-for-1, meaning my risk is the same as my reward here. Pretty close anyway. So I will go along that, and I will watch. You keep ripping. I will watch the red lug. 31.25. I also watch the top of this balance, which is this market profile composite from the past. This one here. But we'll cross that bridge when we come to it. Let's get filled first, and then I'll make a decision on that. But this is a good trade. So that's my aggressive entry. The other entry I use is the conservative entry, and that's retest fail. Right? So, if you say we're below the yellow lug, right? That's where I use conservative entries to go long. Right? So this would be a long step. I would wait for the full ATR. I'd wait for the retest, then a fail, then I would go long. Right? In this instance, I'm going long aggressively. So hopefully that makes sense. So let's put a little alert there in case I get filled so I don't miss it. Let's come in here. Note. This is the sound. Sorry, my thing was down. There we go. So we will know if I get filled. So for some reason, if this fails, right? So I have two distinct setups for icebergs. There's more than two, but the main ones are Titanic, meaning it's very technical, meaning market ran into a iceberg and it held and goes higher. Or broken ice, meaning big money steps in and is wrong, and we determine that by the full ATR out of here, right? So if this gets, because we're above the yellow lug, I'm going to wait for a full ATR. If this gets a full ATR out of here to the downside, well, this is now a bearish setup, but I will wait for retest failure to get long, or to get short, sorry, right? Because we're above the yellow lug, I will go long aggressively, right? So I'll still play this either way, but to play on the downside, I need a full ATR retest failure, right? And this is not the best short area either, right? Because of what we just talked about with the zone. Right? We're through this zone, but we could, right? If this turns into broken ice right here, this could pull back because remember what we talked about: resistance is now support. So I will, if I do get short here, I'll watch it pull back into this zone, and I'll be looking to peel out. Right? So we're day traders, right? I mean, this is obviously a very bullish market right now, but if the volume tells me to go short, I will take a short and watch what it does back into the zone. So I don't think that'll pull back, but we'll see. Again, it doesn't matter what I think. I come up with ideas. My ideas are wrong all the time. I let the real-time volume. You can see we like popped out of here a little. It wasn't a full ATR, but this is holding, and it should hold, right? Because all the traders that decided they were going to sell here ran into a mouthful of icebergs, and now every time, so now it ran against them. So when it comes back, they peel out of their trades, which leads to the next wave up. That's the whole idea behind retest failure, ATR retest failure. You got a little tick strike going off here, so you can see that. Again, this is a meter that tells you, is an algorithm that tells you the size of the order, or the speed of the orders coming through, and the size, and you can do this meter from 1 to 15. I put it at 11, so I'm not hearing every single tick in the market. But it's just good to hear it, especially like if you're not watching. The reason I started using this thing in the first place is because, like literally 12 years ago, is because if you're not staring at a screen, you don't know what's going on there. And that was before Bookmap and the alerts and everything else. So I would be alerted to, hey, somebody's buying soybeans, and I'd bring the chart over, right? So I still have this. Again, I call it waterboarding because it's such a torture treatment when it's going against you, because you tingle all senses. I was talking about this in my trade room yesterday, right? So it's like you have a position on, and you just say I'm short, and you get to watch it going against you. You get to hear it going against you. And I said I might come up with a smell factor where if a trade's going, you have like a little smell box, and if a trade's going against you, it'll smell like a skunk or some disgusting smell. So then you can tickle all of your senses. You get to see it, hear it, and smell it. So that might be my new invention. That'd be great. When people smell their bad trades. Is that a good idea, Bruce? You like that idea?
Yeah, if you could pull it off.
I mean, why not? I'm already being tortured. Might as well throw another sense in there. Okay, let's see what's going on here.
Soybean July iceberg sells ES 150 contracts.
All right, stuff's still coming in here.
Soybean stocks July stock buys ES 150 for contracts.
Very active today. Let's see. Now you got a double whammy. So what I can do here, one of two things. I can either cancel this order, draw this new zone, trade off the new zone, the same way I just traded off this zone. What I'm going to do, because this ice was so big, I'm going to draw this zone. I'm going to enter where I was originally going to enter off of this buy ice, but now I can trail like I just showed you the crude, right? I'm going to draw this zone here based on this. This is a double whammy. Ice stop runs in the sell ice, so now sell ice is coming in, and it is what it is, right? It's like, well, what does that mean? It just means some big money selling it now. It just means the area is very important. So the point is, I'll still enter long here, but now I could trail my stop below this zone that I draw right now. You'll see right here. There's your stops. This is a great thing about the SI on chart as well. Helps you draw it. I don't know why I'm not seeing the sweeps in here. Hold on a second. Let's see. Oh, that's why, because it's set to 500. There you go. And now you get your little sweeps. How great is this to help you draw your zones, right? You can see the little black dot sweeps. Meaning, I use black and white for those because there's just too many colors on my chart. Meaning that the responsive sellers, it means the buyer, so the blue bubbles are the market orders, and then the dots are basically the orders that were sitting in the order book, right? So responsive sellers. So that's all that's telling you. So that was a stop run, obviously running into responsive sellers. Let's draw this on real quick. Actually, I gotta change this color. Hey, I get to get tortured for that trade I didn't put on. But seriously, this thing is going to move 50 points or more, and I'm just going to have to watch the whole thing. It's very upsetting. Not a single pullback. All right, so when you're drawing these zones, remember, you can see the sweep here for the stops, but incorporate all of these prices that were in this spike. So we'll draw that down to here. Down actually. So now you got two different zones. So what I was saying is I'll still keep this original buy stop in based on this light blue zone. That was that buy ice. If I get filled, I can actually trail my stop in ATR below this most current setup, right? Instead of having to do below this one. Same thing that I should have done, or that I did earlier in Crude, right? So let's see if I get filled. If this fails though, now this is getting interesting on the short side, right? I mean, I know we're through that zone, but if this is so bullish, this should hold and keep going higher. this is what I'm telling you. Like, if you're staring at this chart, you're like, let's start here. Not this one. Like this, I'm not shorting this thing at all. This is going straight up, or it's just straight directional conviction up. Yeah, it looks like it there, but then you look at this. Well, the real-time volume, I mean, it hasn't been determined yet. But if this fails, that means sell ice. So you have the stop run. This is the Dumb and Dumber, the dark blue zone. The sell ice wins, and the buy ice is going to be wrong. How important is that to know in this area? If you're just staring at that bar chart, you're thinking this thing is going to the moon. If this fails, something's up, and this is probably going to pull back dramatically, would be my guess, right? So I'll go long if this can hold, but if this fails, if I get ATR retest failure, I will go short with both hands, as they say, because I know this sell ice was right, this sell ice was wrong, the area is what's important, I'll go short. You have no idea what's going on here if you're staring at a bar chart or any other chart. Like I mentioned every webinar for 3 years, this is the most important thing, the strongest edge you can possibly have that I've ever seen in futures trading. We'll wait for that. Let's put our alert and ATR below here. So just if it goes there, I know 4.29 is your ATR. So I will put this at 4 and we'll put it at 4 just so I alerted in case it does come down here. Make that a different, this one's a little more annoying, you can hear it. It's not annoying, but it keeps going off and it does get annoying. Little bike bell. So what, meaning, because we're above the yellow lug, right, I need to see full ATR, which will alert me, and then I need to see a retest, and I need to see a failure, then I'll go short. It's actually this zone here. Boom, boom, boom. Actually, I take that back. I want to go an ATR below this zone. Most recent. You always want to default to the most recent, right? So the bottom of this zone is 17 quarter. Right? 17 quarter. So 13 quarter. I will get my alert. There we go. I almost made a mistake there. And if I get filled, I'll know as well, and I'll go long, and then I can trail my stop based on this dark blue zone. Basically the same spot as my alert is going to be. So we'll cross that bridge when we come to it. So this is the, so I did a couple more. I'm doing some experiment before I forget. So this is the Apex funding. I've been telling you guys I did this because there's all these fundings companies out there that are basically just trying to take your money in these tryouts, knowing 95% of traders fail, so on and so forth, right? So I did this one for my room and you guys to determine if they're legit, and they're legit. I already qualified for one. I was telling you guys this last week, and I was actually supposed to have a webinar yesterday, but we changed it to next Tuesday. Monday's Labor Day. So they are legit. I qualified for the one. I got funded within an hour, and I'm doing 2 more, and I'm doing different strategies. But so anyway, I did catch this Crude. I made more on these, but while I'm on here, and remember, let me put this in here. This is the webinar link. Put it in the room. It's next Tuesday at noon. You can go in there. The guy's going to talk all about it. I'll talk about my experience with it because there is some stuff you need to know. I'm not going to get into it right now, but I did it firsthand just so I could show you. Right? I'm not going to promote something that I didn't do, and so I wanted to qualify to make sure they were legit. Right? I still haven't been paid because you got to trade 25 trading days to get paid, but you get like 90% of your whatever you make, so on and so forth. Anyway, we'll go over it on that webinar, and you guys can ask questions, so on and so forth. So that's next Tuesday at noon. Just didn't want to forget that. So here's a yes. Yeah, it just won't pull back more than a couple points, shockingly. This is where I should have been in and enjoying this run. Instead, I'm getting tortured and can't get one single pullback. But this is the mark of a trend up day, right? 2300 is your ADD. You can see this tick. This is the stuff you look for to determine, hey, I don't want to go short today. I'll still go short because the volume is so bad, but in a normal day, this is the stuff you want to see. 2,300, anything over 2,000 is trend up day. This tick, NYSE tick, cannot get below 0. And it basically was hanging at extreme plus 1,000. All this is the 5,000 plus stocks in the Dow universe. It's telling you if they're up ticking or down ticking. Well, you can see there's, net, They can't get in under 0. You do not want to be overall going short. If this thing can't show, it can get below 0, like this was yesterday, right? So let's just not confuse people. That's today. These are all things that all ingredients that you want to add into your trade ideas, like what you're looking for, where you say, I'm not going short this market until this can prove and get below here. I'm not going short this market until this can get back below 2,000, or the VIX starts to rip, so on and so forth, right? So again, every trade I put on, I try to post in my room as long as I'm on top of it. I haven't posted my last couple of days, but I'll get on that. You can go in and see, hey, what did the tick look like? What did ADD look like when he shorted here? Why was that a loser in his, like, use my trades as like they're your trades to come up with your own trade plan, like I was telling you guys earlier. Right. So there's just been nothing in here to do anything though since the opening drive, of course. Same with NASDAQ, just nothing doing, except for the big money gets their fills as usual. So that's the first liquidity fill. We go over this every week too. This is next. Again, this is not, hey, wow, there's big offers in the order book. I want to be a seller. It's the exact opposite. You want to find areas to buy because these guys will get the market to their orders because they are the big money and they can push the market into their orders. How do I know that? Because that was my game for 3 to 4 years when I made millions of dollars. That was a game I played every single day. And I keep repeating myself in these webinars because there's new traders, but this is how, like, my setups are not based on hypothetical stuff. My setups with the SI indicator and the real-time volume is based on my trading experience as a large trader and how I used to react, how I used to watch other traders react. And like I said, how I knew that is because back then you get the counterparty, so you would see exactly who you're trading with. So if I bought 1,000, I would look over and I would see it was, house 714. I think they were FEMAT back then. I can't remember. This was 20 plus years ago, right? But that was really important information to know. And of course they did away with it because guys were complaining that everyone could see what they were doing as far as their size and stuff. But it helped me understand what big money was doing, what locals. So I was a local. That's just basically a day trader that traded for a firm. I can see, when they were loaded up, if I bought 3,000 and then because I could put up to 3,000 at the time, I look over and I'd see 2,200 of those were my nemesis at the time, 990. Well, then I know, okay, because I trade against him every day. It's like a poker game, right? I'm like, well, this guy can only put on 3,000 total too. So I almost got him at his max. If I can push this market a little bit in his face, he's going to puke it, right? So the point is, all of these setups are based on my trading as a large trader, right? So it's not hypothetical stuff. Do you see what I mean about the waterboarding? This is what I have to listen to, not being long. So this has literally been going off for an hour and a half straight. I mean, I love it, but I hate it. I hate it because I don't like listening. It's just like I liken it to being waterboarded. I've never been waterboarded, but it's got to feel just like this. Look at this. I mean, it's just not a single pullback.
Scott, maybe can you cover a little bit, like, since you missed that trade, and I don't want to, you don't need to cover that part, but like, because I know it's upsetting. But the point here is, like, if you had been in that trade, and now you're looking for another trade, I really like the way you treat it as a separate trade, and then you manage your stops accordingly, all stops now to that second trade. So like if you got a new setup here going long, what would you do?
Right. So if I would have got, well, right now we're at the red lug, so I'd be out right now. So I'm not going to complain anymore after we've already tagged this. So even if this goes up another 20 points, I can't say I'd still be in it. I'd be out right now. This is the whole reason I'm still going to go short right here, even though it does look trend up. We've already talked about this. We got red lug, prior market profile composite, extreme standard deviation. The volume is terrible. I will go short. So I would be out of my long. But back to your original question.
Iceberg sell ES.
Here we go.
712 contracts.
Finally.
712 contracts.
Literally, this is the first signal in an hour.
S&P stock by ES.
Nice double whammy.
507 contracts.
That's exactly what I wanted to see. I just want to see this get over threshold. So this was, back to back. So you can mark this. This is threshold. My threshold's 500. This was right at 500, right? 306, 192. Then you had, this was not quite threshold, but I could still draw this zone, and I'm going to trade off this to the short side if this holds based on this stop run. And there is some sell ice in here too. You can just see him buying the crap out of this thing. But my torture is over because I would have been out right now of the long. We'll go over your question here, Bruce, in a second. I just want to make sure I get this zone correct. So this is not correct, right? Just because here's the swipe, that's why I drew it originally, but you got to make sure you get in. I mean, I'm not using this because this is threshold, but you got to make sure you get both these stop runs. And you can see there's still prices in here that I neglected. So now I got to remove this and I make this wider. Let's make this a stop run color. And this is barely threshold too, but I mean, there's enough going in this area that I've been saying I wanted to short it. So if this can hold and move lower, I will short this market. I'm not expecting some huge pullback because of the internals, but I think we can pull back because of the red lug, market profile composite, so on and so forth. So the way I trade the red lug, because it's so powerful, red and blue, I will enter this aggressively to the short side. So I was saying before, if we're above the yellow lug and I get a short setup, I wait for ATR retest failure. Well, if we're at the red lug, I don't need to see full ATR retest failure. I get in the minute it goes in ATR, I'm in, right? That's if this holds. If this, hey, this busts up, we break out of this and we build new lugs, then I'll go long. It's fine. It's got to prove to me it can do that. I don't think it has the power to do that, even though this is going crazy for an hour and a half, just because of this. This is sick. I'm very surprised we're continuing. This is all continuing with this kind of. This is, look at this. This is like 50% of normal volume, 50 to 70%. This is not, usually if you see this, same in NASDAQ, you don't even want to be trading, right? Because it's just algo city. So at any point now, I'm expecting one of these, at least a little bit. Well, we'll see. That's what I expect. I let the market tell me. If this gets an ATR above this zone, then it's a bullish zone, and all I need is to get is the new lugs, and I'll go long. I know that's contradicting what I just said about the volume, but obviously something is different today, so we'll see. This is TR in here is 6.44. So if we get 6.5 points above here, this is officially a long setup. So that puts me at 52 quarter. All right. On the downside, I will short this aggressively because of what we just talked about. At 6.5 points below here, that puts me at 36 quarter. So that's step one. We already did the steps, but I want to look at my risk now too, right? So ATR, so if I'm getting in at 6.25 points below here, 6.5 points below here, when I say 36 quarter, I think this is right. We'll check it here in a second because you guys need to be using this as well. 36 quarter, right? So now if I'm risking, if I get filled on this short,
July iceberg sells EW 153 contracts.
I would be risking an ATR above the zone, right? So that's 6.5, that's 13 points, plus the size of the zone is another 3 points. So that means I'm risking 16 points all day on this trade if I enter it. So then I go to my risk spreadsheet and I say, you guys should all be using this. We go over this every single week. This is part of my trade room. That's one of the perks of my trade room. There you go. If I'm risking 16 points, I could put on a 3 lot. Right? Very, very important. You do not want to be risking more than 1.5 to 2% of your entire trading account on one trade. If you do, you're over trading and you will eventually blow out your account. I will guarantee that. All right, so this gets to 52 quarter. Is that what we said? 6.5. 52 quarter. And then this is a bullish setup. And then all I need to see is new lows and I'll go long on a retest. Remember, I'm not going long until we get new lugs here. Ludwig levels. We say lugs. Someone in the room came up with it so I don't have to say Ludwig levels. There you go. It's kind of weird though. I don't know why that's true. I don't know why the yellow is way down here. That's really strange. I didn't restart my lugs today. Like a lot of times in Sierra chart, you got to restart them. That might be the issue. But either way, we have new lugs. So the next lug is up here at 70, the red lug. So if this turns into a bullish setup, I will go long. We still don't get an ATR above here though, right? So we still don't know what this is. This is how I determine the 6 setups. There's the Dumb and Dumber, the Double Whammy, Titanic, Broken Ice, Stop and Hold, and the Unicorn Step Brothers. Step Brothers is when you see stop runs and ice in the same direction, right? So buy stop runs and buy ice, sell stop runs, sell ice. Step Brothers. It's the new setup. And I'm really going to work hard this weekend on getting the new course out, the new SI indicator course that will cover everything, right? The one I made is still very relevant to learn your setups, to learn the thresholds and everything else. But I'm coming out with a new one. I'm going to work over this Memorial Day weekend. I'm going to try to limit my golf and finish the course. So if you bought the prior course, then there will be a deep discount for it. And I have all those emails and stuff. So, but that'll be available. And then I'm going to put out another course. Hopefully I can get that done too, of the 4 important areas of charting, right? So, where I draw my zones. So I'm praying I can get that done this weekend, but I got to get on. I've got to finish it. There's just so much more now. So it's going to cover everything, right? It's going to cover the SI indicator. It's going to cover the on chart, right? And all these different done this weekend. All right, so this did not get above here. So this is what you see a lot of times too. We talk about this, like if you're, and this isn't that heavy of liquidity, but it's still liquidity. So when we get up here, so say you were long and you're not using lugs or whatever, you keep an eye on this liquidity. Many times when the market gets to the liquidity, it won't fill first time because the algos pick it up and then they run it away because they want, so I go over this every webinar too. If I were to drop a 500 lot in here right now, this market would scoot away from it, right? It's the algos picking that size up and running away, trying to make this person chase it. And then once they fill it, then they run it right back, right? So it's the same thing happening here. They don't know that this person is not going to chase anything. It's been in here this whole time, right? Since this morning. So, but what my point is, many times, so if you are long here and you see it get up to this liquidity and it starts to stutter, I would get out of some because the algos will front run that liquidity and push away first time. This liquidity will still get filled, but you may have to endure torture treatment as it runs it away and does this instead of just getting out of some. This could come back here 4 hours later. Like if you want to be tortured for 4 hours, then be my guest and hold it the whole time.
Scott, yeah, I just wanted to let you finish on the algos there. There was questions about that. And then Adrian is informing us that some of the lugs have changed already on the ES.
Yeah, well, that's what just happened here.
Oh,
So
okay.
what I should have done today, I don't know if this was already, I should have restarted my Sarah chart, but these, just confirm with him, Adrian, are these the correct lugs? That's first and foremost. Secondly, I just lost my edge. Hold on a second. This product I used to find out if we're overbought or oversold. I'll show you that as well. And it is available now too. We'll talk about that too. Last webinar, a couple webinars ago, I was saying it wasn't available to the public. That's this right here. So this is not overbought. It was a while ago, 905 Central. But I use this, all this is showing you, this is a TAS product. It wasn't available, but you can see this in my room as well. This is showing you, for instance, this is S&P 500, right? So it's telling you 5-minute TAS boxes, which is just mini market profiles, right? So when this, you can see every time this thing gets above, I think that's soybeans. If you get right above, this is the 67% line, just meaning 67% of the stocks, this is not showing that right now, but are above or below their TAS minute boxes, right? Or TAS 5-minute boxes. So this is just telling you if things are stretched out, right? And then you get these reversions every time it gets above here, right? It doesn't happen all the time immediately. But the point is you don't want to be initiating trades if you see, you don't want to be initiating longs if you see this up there, even though today is a different day and the market kind of just held there. Most times you get extremes, it will pull back, and you could fade it, but most importantly, you don't want to be initiating longs or shorts if you see that thing overbought or oversold. So we'll watch that as we go up here. Hold on, let me get my. All right, so I am filled here. So this is what we were talking about. So I traded this long off of, I just kept this in, it was off of this big buy ice, right? And then this came in after, and I said, I'm willing to keep that in there, but because I can now trail my stop based on the newest setup, right? This is kind of a different variation what I normally do, but I was willing to take that because this market's so bullish. So we'll now go a full ATR, a little outside an ATR below here. ATR in here is currently, this is amazing. This is the first trade I put on, isn't it? It's pretty weird. 4.11. So I'm going to go 4.25 points outside of this dark blue zone. All right, so this was at 17 quarter. That's 13 quarter, 13. I'll just leave that there. That's my alert. So I will stop this out at 13. Okay, so we're along that. Let's just take one more look at the lugs, see where we're at here. I don't know why that does that. All right, we still got some room to go to this red lug, right? 10 cents. So the only thing that worries me about this long is this market profile composite. We're right here, but this market's obviously very, very strong. We got new lugs. We got the volume set up. I'm okay with that trade. All right. Sorry, that was my video recording, or I do the voice recordings too for my setups, or try to for my room. All right, what am I doing here? Okay, yes. So we still haven't gotten an ATR above here, so I'm still going to short this if this never got an ATR, right? So I'll still short this thing. So any questions, Bruce? We haven't really done questions. I don't know if there's been anything.
No, I've been answering them in YouTube here. Let me get to Discord.
Forgot about this too.
One lot.
So this is disqualified as a short. Sorry, go ahead.
No, he's just talking about he was looking at the ADD and pegged 25 plus 2500. Just looking at the internals.
Okay. Also, if you could put that link to that webinar next Tuesday in YouTube, I don't know how to do that. So if you can do that, that'd be. Nice.
Yeah, sure. Let me get it from you after the webinar, Scott.
Okay.
And I saw you're looking at some of those domes, the rhythmic domes. Just want to mention, actually, guys, I mentioned a lot of different things in here. First off, we're releasing the new liquidation indicator that I spoke of for crypto. That shows not just, Scott's looking at stops and icebergs. This is actually going to show where traders are forced to trade by the exchange. The exchange is actually liquidating their positions due to margin calls.
You think that's an edge?
It's unbelievable. I can't believe they're giving out this information. So anyway, look for it. There'll be an email around 4 p.m. or 4:30 p.m. Today. It coincides with the trivia. We'll have a trivia event later today at 4:30 p.m. as well. And there's a video for it that is actually scheduled in YouTube Premiere at 4 p.m. Okay, so I got through trivia. I got through the liquidations release. Guys, take a look at it. Even if you don't trade crypto, it's amazing. You just need Global or Global Plus. It's worth it. You download it, install it, check it out. Everything is free if you have Global and Global Plus. The other thing I wanted to mention, and I cannot give access to anybody right now, but we have a new Dome, and also it's called Dome Pro, and also an Execution Pro releases that you'll be able to trade right from the well, you can trade right from the Dome as well right now in Bookmap or from a chart, but this is a really robust Dome that will be released in June. All right, so you don't have to trade from Rhythmic R Trader Pro or whatever. Just wanted to mention that it will be released soon, and I'll have more information about it.
Cool. Yeah, I'm not real excited about the crypto thing because not that it's not incredible. It's because now I'll get no sleep because I'll be trading crypto in the middle of the night and I need my sleep. So thanks a lot, Bruce. Appreciate that.
Just put it in the golf
All right,
cart.
so this
Put
don't
a
tell me.
laptop in the golf cart or something. I don't
Do
know.
not. I'm sure traders do that now. I haven't done that. I haven't gone that far. I mean, I do look. I have put on trades on through my phone, but yeah. It's, usually, if I'm on the golf course, I need a break. All right, couple more ticks. Then this will be a full ATR above here, and then I can go long on a retest, right? So the reason I'm waiting for a full ATR retest failure is because actually I should be take that back because we have new lugs here. Like we're above the yellow lug. I was thinking when we drew this, what usually happens. That's why I don't know if these were correct to begin with, because I didn't restart my Sierra. Usually when you draw new lugs, the yellow is right where the prior red was. So I was thinking I needed a retest failure. In actuality, we're above the yellow lug. I should already be long this setup aggressively, right? But let's see. That did not get an ATR above there though. Let's see. 5150. What did we say? This was 45.75. So we needed to see 52.25, the current ATR. Actually, it's only 6 points, so 51.75. What did I say it was? Wow. Did you see how? Guys, this is what I'm talking about. This is why I moved it to outside an ATR too. Like it's amazing when you get the volume areas, when it gets a full ATR away from there, that these algos smack it back. It's just, and this is why I moved it outside an ATR, because to say I wanted to get long aggressively, well, that's where I should have been long, basically right around the 90% area. When I was doing 90%, I would have been filled and this thing snaps right back in my face. So that's why I've been going outside an ATR. So technically, I'm not long this yet. Or even aggressively, I wouldn't have been long outside an ATR. So I will go long here. We'll go long right there. Again, this is because we're above the yellow lug, and I'm taking it outside of an ATR above this stop run zone. But if this does hold, actually, what I have to do now, I know this is confusing people because again, I thought the lugs was a different type of setup here. So now to go short, I need to see full ATR retest failure because we're above the yellow lug, right? So hopefully that's not confusing. I was originally going to do this because this was the red lug, and I get short aggressively off of the red lug, but that's not the case. So to go short, I need to see ATR retest failure, which is probably what you want to do anyway today. Any short setups that you take, you want to see full ATR, prove you can get an ATR away from the zone, retest it, fail, then go short just because this is such a trend up day, right? With the ADD 2300 tick, can't get below zero, right? If things start to change, the one thing I am noticing here is this, look at this VIX, right? This VIX is not making lows. So that's interesting, right? So when you see the market going up at new highs, you want to see the VIX making lows, right? Or vice versa. That's not happening, so that's interesting. So you keep an eye on this, right? So then all of a sudden you start to see negative 800, negative 1,000, even any negative today would be a start of a sign. But you see this start making some extremes, and then you see this turning over, get back below 2,000. Can't see it on this, right? This is telling you something is maybe up here, right? As far as the longs may be done, that this is just not making lows. It's really strange, but keep an eye on that. What happened with soybeans? Nothing. Right on my entry. So the reason I deleted that crude. Remember, I was going to go short on that setup there on the stop run because we got a full ATR above this zone. So then this is now actually. Let's see where we're at. I could probably go long this on a retest. Let's see here. Yeah. Remember, I didn't want to go long into the red lug. Kind of like down here, that's where I got out. But now we have new lugs. So now if this pulls back to that stop zone, I will go long. because we have our new lugs, right? This was not an ATR. This top of the zone was 80. ATR right now is 29.5. So all we needed was 30 ticks above here, and it's definitely more than 30 ticks. It's got 70 ticks above here, or I'm sorry, 60 ticks. So now, since we have new lugs, I go along gleefully, wait for a retest, fail, 30 ticks above here, which would be right here, 1410, I'll go long. My stop will go 30 ticks below this area. That was this. So I will put alert in to know when it retests that zone. Oops, I didn't want to do that. Some more waterboarding. I think I'm long, yes. Not yet. I love these algos just like fighting the ATR. It comes right there. Nope. Let's see if I can single-handedly stop this straight up move for 2 hours. I'm pretty sure I can. Again, guys, like this feels terrible to me, right? It feels terrible going long in this. Actually, we're in the zone too. Hold on a second. But if this is moved straight up all morning, and I know the volume's terrible, it feels horrible, but I have a plan, right? I follow my rules, my trade rules. I don't say having a bad feeling is not part of my trade plan, and that's for a reason, right? I want to be systematic in my trading. These algos that you're competing against that are 85 to 90% of the market, they don't say, yeah, all the conditions are met here for a long, but I don't have a good feeling about this, right? This is what costs traders money and why traders don't make it, because they throw in their personal feelings instead of trading their system, right? So as bad as this feels, if I go long, I'm glad I didn't get filled there. Again, if I was at 90%, I would have been filled again. As bad as that feel, I'm following my rules. And if I lose on it, I follow my rules. When you judge your trade, when you go back and look at your trades at the end of the day, you should not be judging yourself on P&L. You need to judge yourself on if you followed your rules. If you followed your rules and you lost that day, that is just trading. Trading is a percentage game. Just like a casino. They know some guys are going to get hot once in a while. Do they change the rules every time someone walks in and wins 100 grand off of them? Do they stop? Do they stop offering the game? Meaning, like a lot of traders just stop trading and don't trade anymore because they had a losing day. Do they alter their rules of blackjack because one guy beat them that day? No, it's the same with trading. You have your plan. You know you have the edge. If you're using this information, this real-time volume, SI indicator information, you have the biggest edge in the market, right? And you actually just got to retest this zone too, by the way. So you have the edge. So just follow the rules, come up with your rules. You can use mine or come up with your own, but make sure you do the same thing every time. Don't change them because it feels bad, right? Again, casinos don't change the rules because they feel like they're going to lose that day. They know over the long run, if they follow the rules and they have the edge, they will make money. That's how do you think casinos are in business? Be a casino. That's the best advice I can possibly give you. And that's what traders can't do, right? Again, that trade feels horrible to go long there. But I'm following my rules. If I lose, fine. It just gives me information going the other way, and maybe then I'll turn around and go short on my next setup, and then I can, and then I make what I just lost and then some back. That's trading, guys. Like, if you think you're going to come in here and never lose, it's just not possible. Speaking of which, I missed this trade in gold. Perfect Dumb and Dumber here. Let's give me something to complain about before I get off the webinar here. Let's see. We actually heard this, and I just completely forgot about it. There, and you can see the sweeps. That's this stop run here. Large, 315. Let's see how much money I cost myself on this one. It's just hard to keep track of everything when I'm on these webinars too, because I'm on one screen and I'm not like surveying everything, but it is what it is. It's just, look, the whole idea for this is to teach you guys to learn to use these areas, and that's what we're doing, right? So here's the zone. This is clearly an ATR away from here. ATR in here is 19. You can see it right there. Just move the decimal place one over. So this clearly got an ATR away from this zone, right? So depending on where we are in the lows and the structure stuff, we'll look at this in a second. There's your ATR. This one's 70 ticks. So I may have been in this aggressively. We'll look here in a second. Otherwise, if you get a retest failure, you can go short. So that's step one. I should already know where we're at, bigger picture. This is what you should have done every morning before you even start trading, you know where we're at. All right, so this zone's basically dead. I mean, we've been trading up and through here, but we can look at our structure here and figure out what is going on. So basically this is just ranging, right? This is just one balance area. We just put in a selling tail. You can make this a balance area. So this balance area, this failed breakout. So this is a good example, right, of what should have happened, right? Here's your balance, multi-day balance. Tried to break out, no go. Got through the high volume node. This thing should have done what? That. What did it do? It held on, it held on. This is telling me the next big move in this market is going to be that way because of what didn't happen. You see that? So even if you're trading yesterday, this looks like this happened yesterday, again, I left in the afternoon. The correct trade at the time is to get short and you would have made money. This is a decent move, right? This is 100 ticks, is to look for shorts because of the failed breakout. But now, even if so say you got short and you're like, I'm holding this thing. This should go down to this directional conviction area, this balance. I'm holding this. Say he comes back and you get stopped out, right? Okay, you took a loser there. But now that's information because that should have done that. Instead, we built balance over yesterday, last night, and today. That should not have built balance. So now that's information. Even though you lost on the short potentially, now you're like, this is go time on the long side. Granted, we came up here and there was a real-time volume setup that is a bearish setup right now. But I will bet, if I were a betting man, and I am, that this is going to build balance and the next big move is going to be up. I'm not saying it's going to happen today, but you watch this over the next couple of days. Whoever wants to bet me, I will bet the next big move is, meaning like 200, 300, 400 plus ticks, is to the upside versus the downside. This had its chance, had its chance, had its chance. No go. It's going to probably balance, rip. So that's what you keep in mind. And then when when everything else agrees, your lugs, then of course the real-time volume, that's an A+ trade, right? Let's see what this looks like here. Let me guess the stop run was right off the red lug. Of course it was. That was this. So if I was watching this, even though I think the bigger move is coming to the long side, I would have shorted that stop run. What's my rules? Aggressively off of the red lug. Here's your stop run. I would have been in there 20 ticks, and I would have caught this, and I definitely got out of at least one, half of them at the yellow lug. Look how good of a trade that is. And I completely missed it because that's how I roll. There it is. So I did hear this go up, but we were doing something else at the time. I would have been in ATR below there, 20 ticks. I would have made, looks like, 70 ticks to the yellow lug. I would have been on a half. I would still have half on. My stop would be above here. Right. So this is, even though I missed this trade, it's good for you guys to learn. Like, I would have been short there aggressively. You could wait for retest failure, but just remember, once we get out of this balance area, either way is going to be the big move, and I'm betting it's going to be to the upside. Right. So that doesn't mean, again, we're day traders. My bigger picture thesis is going long or a big move up, but it doesn't mean you can't catch moves inside of this current balance area just like this. Right? Why was this area important? It's where this directional conviction started. Right? This is overnight, but all we're doing is building balance. So you could still trade in here, but I'm just saying when we finally break out of this, that's where you're going to want to be getting long aggressively with more size, and you're not going to want to get short on the break of this because all the shorts are screwed, and we already know what didn't happen. You see what I'm saying? But I would still take a net short is my point because we're day traders, and that look, if this was truly bullish at that time, that stop run should have held, aka a stop and hold setup, and it should have moved higher. It's just not ready to go yet. So you could have taken advantage of that and caught the move back down to the yellow lug, which is right in the middle of this balance area. Hopefully you guys are understanding, so when everything aligns, once this thing breaks out of here finally, breaks out of that balance area, breaks out of this red lug, I get a volume, so that's an A+ trade because I'm waiting for that to happen. Then I put on more size, right? But in the meantime, I could still be, it's not really scalping, but I could be catching these moves, and the real-time volume points you to that. All right, just bounced around the zone, still not filled, but it's not a bad thing, I don't think. I would love for this just to break lower and get it set up, and then I don't have to be going high along at the highs of the day. That's not really what I want to do, but again, I'm following my rules, right? So, Waterboy, any questions, Bruce? A lot of shoulda, woulda, couldas today, I can tell you that. This is moving in my favor. You can see the little tick strike firing on. Again, there's discounts to this thing on my website as well. Bruce, you there? Bueller?
Yeah,
Bueller?
sorry, I was on mute there. So a few questions.
Did I miss a natural gas?
No,
This
we're
fired
doing
up too, I think.
pretty well.
2 to 79, 2 to 79 compared to the previous 3 to 07.
No, I
This
think
was
we're
a
doing
setup?
all right.
Okay.
740%.
So this was right after the number. We missed this too.
40%.
This is threshold.
So just to recap, the US sells $39 billion worth of 4 week deals.
Take that back. This one here, 189. I use 150. You want to see over 200 a lot most times, but you know you can use 150 as your threshold. This was 189, so I would have definitely drawn and traded off the zones. You can see this is one house too. That's this white line. But you want to incorporate where the biggest spike is. You don't want to be. I know this buy ice started over here, and actually it's showing this is net, but you don't want to. You want to be drawing where the concentrated volume was, right? So I'm not because the market reacts. So my point is like, if this were to stretch, so say this was like, this just did this, right? Well, you want to be playing off the biggest, the most concentrated area because this could come in touch and then be another like, 20 ice, 40 ice, 60 ice. Well, that's not going to stop the market. You want areas that are stopping the market, even though say the iceberg was still continuing in here. You know what I mean? So you want to make sure you're getting the threshold area when you draw your zones. You don't have to start it where this ice actually where this one house buy ice started. I hope that makes sense. The point is just use your spike areas on that SI subchart. That's right. Just let me know when I'm going into your other guy's time, the Tom guy. I don't want to go into his webinar. All right, so that's that.
Yeah, he gets started right around now. But I don't know if there's anything you want to wrap up with, Scott, or look, we're trying to figure this all out as well, and it's possible to have two YouTubes running at the same time. And we want to build out more and more traders and more different trading styles and different countries, different instruments, etc. So we're just do what you need to do, basically.
Right. Okay. We'll just talk about this quickly. I just resetted this morning, so I lost all my market profiles on. It doesn't really matter because we're way up here. So let's just take a bigger picture look. But you can see you just saw we were testing that zone. I mean, look at this market. It's just nuts. So anyway, this is a short setup that I just drew. We'll come back to that. And we're retesting that zone. What was right here currently? Well, that's a selling tail. That's instant rejection. So now we're back in here. We're retesting that zone. I will go short this zone. Right? I would have waited for retest failure anyway on the zone. So that was here. Sorry, back color. Because we're above the yellow look, right? So I wait for here's your retest right now. It hasn't failed yet, but there's the zone, right? So now figure out the ATR. Your ATR is 56. That's not fun. 56.04. So I'm gonna go a little bit outside there. So say 58 ticks. Just go a couple ticks outside there. So last digits, it's 930.09. So we want to go. So 60 ticks below there is what, 49? So 50. I say 56. So like 52. Or I'll short this. It's a 2 lot because this is a lot of risk on this trade, right? But that's what the volatility is telling me I have to do. Again, guys, I don't like to risk 100 ticks on my trades. But if the volatility is telling you you have to do that, you have to do that. We talk about this every week too. Get this in real quick. Traders just don't want to, they want to put on trades where they're, especially in the ES, right? I want to make 4 and risk 2. Well, what is that? The market doesn't care what you want to risk. We talk about this every single week, right? The market cares about the volume areas. So you better be putting your stops outside. So if I do get short this market comes back with a 56 ATR right now, which is extremely volatile, and I get short, and I put my stop right here. What do you think is going to happen, especially in this market? Because all I want to risk is 20 ticks, right? So if I get filled on this and I put my stop 20 ticks above here, what do you think? What are percentages am I going to get stopped out? 99%? Just on randomness, on algorithm? Look at this stuff. Look at this Christmas tree. Why would you put your stop just because you don't want to lose more than 20 ticks? Well, first of all, you're going to lose 20 ticks, very, very likely, unless you get lucky. And over the long run, you're going to lose a lot more than you get lucky, right? Put your stop an ATR outside of an ATR outside of the zone. Yes, you may say, I don't want to risk 100 ticks. Okay, well then don't trade the market. Because if you want to be out of the algoville where it's just randomness, you've got to place your stops outside of the volume area. If not, you're going to get stopped out the majority of the time. Same stuff every week, guys. I know you're probably sick of hearing it, but it's the most important thing. That is the biggest fault of traders, is putting their stops and where they don't want to lose money versus where the market is going to respect. So this is moving a little bit in my direction. Again, this trade didn't feel good either, right? This thing is straight up. I really want to go long, and we're in the zone too. I should look to take one off here, but whatever. One is I follow my rules, right? I followed my rules and I got long. That's all you can do. You can't be changing stuff because you feel a certain way. You can, but you're not going to make money. So now you see, this is why I changed this to outside an ATR. How many times have you guys seen in the last year me get filled on that exact just inside the ATR because I was trying to save a couple ticks, and then I go through that. This would already be 10 points in my face. So that's why I'm going outside of an ATR now. I'm going to sacrifice a couple ticks not to have this happen to me 5 times a day. So the benefit of that is you guys don't have to hear me complain all the time. I'm getting filled because it's been actually really helping NASDAQ and everything else. If I go outside the ATR, I'm not getting filled to the tick anymore, which is kind of nice. All right. Any other questions, Bruce? There's a lot of talking today, not a ton of trading, but it is what it is. I still think it was kind of educational.
Yeah, no, it was great. I think I put my the link here into the chat. I know I did in YouTube. Here it is in Discord if you guys didn't get it. And you're interested in reaching out to Scott, you got his email, you got his website, etc.
Yeah, put the trade. Do you have the trade room link? Because I got private messages coming in the chat.
It's in there.
And guys, if Bruce forgets to put it in the YouTube channel, the webinar link for the Apex funding, trader funding, just email me and I'll give you a link. I'm going to send out a mass email too for people on the subscriber list. But if you don't get it, it's in the Discord room. But YouTube peeps, you can send me an email and I'll send it to you. But Bruce, if you could put that in there, that would be appreciated too.
Yeah, I will. So
I know that's not part of Bookmap, but trading is part of Bookmap. So I think that's a good way. So again, guys, like even if you're testing out stuff, like I know guys don't like to trade because you start out obviously on this paper trading, right? And people are like, well, I don't react the same. But when you're paying to do the thing, you still got some skin in the game, and you still aren't going to want to lose, and it should feel the same. It feels the same to me being right and wrong, right? Like that. That's why I was always able to trade bigger, because it's not about the money or the size to me. It's about being right or wrong. So at least with that, if you feel like you trade differently with nothing on the line, which a lot of guys do, well, at least you have something in the game where if you're wrong, you got to re-up or you got to pay the subscription every month. So you're still not going to want to lose, is my point. So I highly recommend doing that, especially if you're struggling or if, you don't have a big enough account, right? Why risk your own money? Learn what you're doing on that. And then, so if you lose, you're not going to be losing a ton. You're just going to be losing the subscription fee, right? And if you make money, then you're funded. Like I think it's a no-brainer to do, but I just wanted to make sure that it was legit. That's the point, because there's a bunch of them out there, and most of them are geared towards taking your money in the subscription fees. So, but you can ask all the questions you want on that webinar, and I'll go over my experience with it as well.
Yeah, also send a tweet, Scott, and we'll retweet it.
Okay. Yes, I will. All right, if there's no other questions, and again, I'm just waiting, you know, as long as this doesn't violate this stop zone, this ES stop zone to the downside, or this, yeah, this wasn't a double whammy, it wasn't quite sell ice threshold, even though these were two back to back. I guess this was threshold, I didn't even see this. Sorry guys, so let's just make this a little bigger quickly, so you guys have accurate information. I was just looking at this spike, it wasn't threshold, but you had 400 and 500, so this was 1,000. So this was a double whammy actually. So it's buy stops into sell ice, right? So that's the accurate zone there. Let's just change the colors here, and then I'll hop off and hand it over to the Tom dude. So that's the accurate zone there. So it didn't really matter to my buy, I'll still go long, but for the short, you know, you want to see this, you see it went right down to the bottom of there. So for me to go short, I need to see full ATR in the bottom of this zone, retest, fail, then I'll go short. Other than that, I'll go long, and my stop will go outside of an ATR below this current double whammy zone. That's it. That's my trick. And then I'll go short that natural gas. Again, that fails. As I'm telling you, keep an eye on this market, man. It is a great market to turn to. And then obviously, there goes soybeans. See you later, soybeans. So quickly, where I'm looking to get out of this, some of them, we are in an important zone, but look where we're at, right? I'll get out of, my rule is I get out of all of them at the red lug, so that's 3 more cents. I know it's not going to be a huge trade, but it is what it is, right? I'll get out, and then if this is still bullish and we build new lugs and I get a new volume setup to the long side, I'll go long again. But I don't mess around with the lugs. So we're almost up here. I'll be out of everything at 31, maybe 29 3/4. I go a little bit below lug. I'll just put that in now. I'm pretty much here, so I'll just get out on this. Well, let's go here. Whoops, I'm gonna buy it. There you go. See if I get filled on that. And again, I'll wait for new lugs. If I get a new long setup, I'll get right back in. All right, that's my trick. Hopefully you guys learned a little bit today. Again, I do this twice a day on my webinars in my trade room, and then we'll be doing that webinar next Tuesday at noon for the Apex. Any other questions, you guys can email me.
All right, sounds good. Thanks, Scott. If you like the video, please like or give them a thumbs up here, and subscribe to the channel here. And just a quick note on some other events today. So Tom is up next. If you want to go over and continue with the a live analysis, he's a volume profile trader with Bookmap. Then we have a trivia at 4:30, and we have the new liquidation indicator for crypto markets later today. Look at the market close and new video, etc. It's pretty exciting stuff. So that's it. Thanks a lot, Scott, and we'll send me that link and I'll put it into this video.
Okay, cool. And then I'm about to get filled on this too, so hopefully. All right, guys, I will see you next Thursday.
Okay. All right. Thanks, Scott.
Thanks.
Bye.